What's up, guys?
It's Rowan
and Terry
from ArtofSmartTV, bringing you another episode of
HSC Economic Review.
Now, in this episode, we're investigating a really interesting idea, and that is the Australian economy poised for a recession? It's a big call, I know, in 2020. I think if we look at it, right, we've got unemployment 5.3%, economists are predicting 5.5%. We've got wage growth falling to 2.2%. We've got economic growth anemic at 1.4%. It's flat. We've got inflation. It's increased a little, but it still is pretty horrible at 1.7%. If we look at that economic picture and these sort of key economic indicators, things are not going well. And so, if we look at global economy issues as well, it really raises the question of what on earth is going to happen with the Australian economy in 2020. Are we poised for a recession? What are we going to do? So in this episode, we're going to unpack what we think may play out for 2020 for the Australian economy. We're going to look at the forecasts that both the federal government and the RBA have for 2020, and then we're going to look at, where are we at now and how does that compare to the forecasts? And then we're going to look at maybe what are the things that might make the forecasts actually happen, what are the things that are standing in the way of us actually achieving our economic objectives, and therefore we'll make an eventual call at the end of today as to whether or not we feel that the economy is going to have a recession or not for 2020. So let's dive in, Terry. A question that I wanted to ask you to sort of kick things off is, what was the federal government forecasting for the 2019-2020 financial year?
Quite good things, actually. So they've forecasted 2.75% economic growth, 2.25% inflation, 2.75% wage growth, and 5% unemployment. Right now, though, we've got quite a bit of distance to make up. So the 2.75% economic growth, right now we're sitting at 1.4%, as Rowan said earlier. 2.25% inflation, we're at 1.7% right now. 2.75% wage growth, we are at 2.2% right now. And the 5% unemployment, 5.3% right now. So it looks like we've got our work cut out for us.
And it's interesting because these forecasts weren't made that long ago. They were made in April, okay?
And they've been downgraded from before.
So they were certainly downgraded, right, from the prior budget, and we're about halfway through the year. Okay, so yes, we don't yet have a full picture, okay, of the data, but certainly not great, right? So that's what the federal budget said in April. But the RBA do sort of more up-to-date forecasts. What have the RBA said? They have some forecasts in their November outlook. What do they say?
So they're expecting by the time it rolls around to the end of the financial year for the 2019. It's going to be 2.5% economic growth, so lower than what the federal government
right. So that's 2.75 federal government. They're saying 2.5, but we're at 1.4. I just got to say that still seems like a huge leap. I don't know. I'm mind blown. Sorry, continue, Terry.
5.25% unemployment, which is actually
probably more reasonable, right?
much more reasonable, and 2% inflation, which is.
Again, a little bit of a leap, right? It's less so than economic growth.
Yeah, that just seems,
looking at this, I'm like, unemployment, probably. Look, maybe optimistic, but probably in the ballpark, right? You look at inflation and you're like, 1.7, possible. You look at economic growth and you're saying you're going to put 1.1% on of economic growth, and there's not a whole lot changing necessarily, and monetary policies.
If anything, things might even get worse.
That's right. So that's a big call, right? Now, they're less optimistic, but I think they're still clearly optimistic. Now, the thing to be mindful about these forecasts is that they do operate a little bit as well of trying to set expectation, don't they? So one of the things I'm mindful of is that you don't want to necessarily, if you're the RBA, just... if you're thinking about a bit of jawboning here as well, right? Play out that economic growth is going to be horrible, and then as a result, our expectations are really poor, and we don't go out and do anything. So I'm always a little curious about to what extent they're trying to influence expectations through these. I think, though, why do you think, Terry, not just you think, the RBA has some opinions about this as well, but why does the RBA think that they can hit these, and that these are realistic for the Australian economy in 2020?
Well, I think because as their monetary policy has suggested, they've dropped the cash rate 3 times, and I really think that they're hoping that after the 18-month lag plays out with those, because I think by the time 18 months plays out,
We'll just be out, but it'll be within 12 months, right?
It'll be within 12, maybe not 18, But by the time that plays out, they're probably hoping that consumption will pick up, and we are seeing early signs of this potentially with the housing market recovering, which could have a bit of a wealth effect and therefore encourage people to increase their consumption.
I think additionally there's this idea of, like complementary goods, right? If people start buying more properties, they tend to then, hire removalists, they tend to buy more furniture. And so it is one of the things the RBA has considered, right? Is that idea that if more people buy homes, right, the combined effect of the wealth effect, feeling wealthier and deciding to spend more, as well as just needing to buy more stuff to fill the bigger home that they've just invested in, or the first home in some cases, right? If you're lucky, then it may lead to that. Yeah. What else are they looking at, Terry?
We've also just got the idea that the public sector or the government is going to hopefully, do their bit for the economy, right? Because we've talked about in the past, the two have to work together. They've got to coordinate. So they're looking particularly in the National Disability Insurance Scheme to really support grow public consumption, because I think that was a big outlay for them in their recent budget. So they're hoping that will do 1/4 of growth in 2019, 2020. And of course, we've also got the huge investment into public infrastructure, which the RBA is hoping that they will potentially, because I think it was 100 billion over 10 years. Was it?
Yeah, that's right.
Yeah, okay. Hopefully
it sounds huge.
Yeah,
you double check that, right?
Yeah, so they're hoping, I think, but a lot of that was actually concentrated, obviously, in the later years, of course, right?
Which is why the RBA has trying to call to bring it forward, right? I think the other thing that they've looked at is they are expecting household disposable income is growing just due to the tax cuts, right? Now, again, there's not that many that have come through. Yeah. They're in the future, but there is that low to middle income tax offset. And so they are really looking at, this mixture of consumption's growing through a couple of different ways. And they're actually quite honest in that, honestly, they're not saying consumption is growing because their cash rate has fallen. They're actually saying, if we look through it, they're saying, tax breaks, right? Well, that's fiscal. Okay, NDIS, well, that's fiscal. Yeah. Public infrastructure, well, that's fiscal. So they're actually saying, well, look, really, fiscal's playing a really important role, and that's why we needed to do more lifting.
Yeah. But I think they've been very vocal about that from the start. I think the monetary policy was always just, I think they've acknowledged that they're taking much more of a supporting role in this case, and they really need fiscal
to come to the table. Definitely. I think the other thing, just finally on this, is they've also looked at that mining investments increasing. So they think that there was a bit of a trough in mining investment, and there was a wind down of mining investment off the back of the mining boom, and that had a bit of a drag on GDP growth. And so they're now looking at that, seems to have come out, right? And we've sort of got a return to a bit of uplift in mining investment. So they're sort of saying, well, look, we think that these factors, combined with potentially future reductions in the cash rate, will be enough to get the economy to where it is. Now, I think, and the RBA does call this out, certainly, but I think there are a lot of things that might get in the way. I mean, this is a bit like what we've presented right now is, I think, quite a rosy, optimistic picture, right? What are some of the things, Terry, that could get in the way of, the forecasts actually being met?
Well, I think we live in a globalized society. And unfortunately, it doesn't just happen in a vacuum in Australia, right? We've got to consider what's going on overseas. And I think we had a little bit of a bit of a ceasefire with the US and China with their trade dispute, but it started to kind of ramp up again. I think Donald Trump started to announce he's got, I think December 15th is the date that he's going to have a new round of tariffs. I think he's trying to force some quite heavy stuff for China to do. I think that he's asking them to purchase a large amount of their agricultural exports. I think, again, that's starting to heat up, and I think that's, again, going to undermine some of that global confidence. And I think, with the size of the US and the size of China and their significance for us as export partners, right, I think that is, again, possibly going to have a little bit of an effect on just business investment and confidence, and then global confidence overall.
Definitely.
Yeah,
that's right. And I think, to just highlight China, I mean, China also have, some policy trade-offs. At the moment, they've got, obviously, economic growth is slowing. Themselves internally, they're trying to work out how to best continue to support that. You've got, the issues with Hong Kong and China right now, just creating political and economic instability in the region. Yeah. They're escalating. Who knows what will happen with them at the moment as well. So I think all of that does really create that uncertainty that you highlight. And when that happens, really it's going to be a hard push, really, both investment and consumption. Like everyone, you sort of pull back to go, well, let's see what's going to happen. So we've got that going on. I think what's also interesting is that, we've had some attacks in September on Saudi oil facilities. Now, that actually had quite immediately a 20% surge in oil prices in September. Now, it was a one-off attack at the time. But if you go back and you look at, the historical recessions that we've had, if you go back into, the 70s, 80s, 90s, oil price surges due to shortages have played one of the critical roles in creating, global recessions. Now, not to say that's going to happen, but certainly a 20% uplift in prices over across September, October as a result of an isolated attack on some facilities, right, does present the risk that, well, if those attacks continue to occur and we see oil supplies shrink, it's going to create a lot of cost push inflation, and then we get into this really dangerous territory of stagflation, right, where we've got not great economic growth, growing unemployment, and also growing inflation, and not the sort of inflation we want. Which is pretty painful. So I think, again, that may not be likely, but these are some of the factors that I think certainly could get in the way. So, Terry, I guess, is there anything else that could get in the way of Australia achieving our forecasted goals for 2020?
Well, I'm going to go global again, all right? Because I think with IMF, I just wanted to take a look at, they've released a report basically saying that global growth is forecasted at 3% for 2019. We're probably going to ride that out until the end of the year, but that's going to be the lowest point since the GFC, and that is quite concerning for me.
Particularly because, again, like we talked about with the dollar episode that we did, there's not like a singular event that's causing it, right?
Just, if anything, if you want a list of factors, I've got here that, it's actually just people are getting older on. Okay, there's been a decline in the growth of the working age population across China, across the Eurozone, across USA. We've also just got low productivity growth. It's not an issue. It's not just an issue here in Australia. It's an issue around the world. All right. And I'm gonna throw this one. It's a bit out there, but climate change, right? Because we are going to need to accelerate the work that we do in terms of reducing our emissions. And this is actually something which the IMF was explicit about, that climate change hangs in the balance. And with all these things going on, right, it just doesn't fill people with a lot of confidence and the capacity to go out and consume and feel confident investing.
And I think, that was one of the things that came through with, Australia Talks, ABC's national survey, in that, there was a general consensus and significantly a majority around real concerns about climate change and the impact for the economy. So I think we see that not just at a global level, but it certainly plays out in Australia as well. So I guess, what do we think then? Like we said, we were going to make a call on it. At the end of this episode, we said we're going to make a call. Do we think Australia will fall into a recession? Are these global factors going to be enough to push us there or not?
I don't think so. Because I think, just going back to that IMF report one more time, I think they did say that they do expect growth to pick up a little bit from 3 to 3.4% in 2020. And so if we do have slightly better economic conditions, just because obviously we've made it sound like it is a bit doom and gloom, but there is going to be probably a recovery in a lot of those emerging economies, like Brazil. I think Brazil had some issues this year with the Amazon fire. We've got Mexico, we've got Russia, and India, right? India actually hasn't has not skipped a beat, right? All this has been going on, right? China's slowed down, US has, had issues, Eurozone, and India's just rolled along.
Still kicking along. So in other words, what we're saying is, because I think the other thing with a recession to appreciate is that it's 2 quarters of negative growth. Yeah. Like we haven't, based on the quarterly results, we haven't really got anywhere near that yet.
We had a per capita recession, but not an actual
recession. And so I think per capita recession is maybe something that we continue to see. But certainly I also agree. I don't think we're at recession, and short of like an oil shock, something that's catastrophic and surprising. I certainly don't see us getting into a recession. Although, questioning the forecast of 2.5%, I'm a little skeptical of that, unless we really see some of the time delay stuff play out, and both fiscal and monetary, we see really a really big uplift that we weren't expecting. I think we might still not hit the forecast, and they're still optimistic. I think it's probably likely we'll see economic growth maybe, if we're lucky, creep to 2%. Okay, I think we'll see unemployment creep somewhere around the 5.3 to 5.5. And inflation, if we're lucky, might crack 2. It might end up sitting around 1.9. Yeah, somewhere around that ballpark, right? So that's what we can expect, guys, for 2020. We want to know, though, what do you think, right? Let us know in the comments, what do you think is going to happen for that Australian economy in 2020? Are there things that we've missed that you think are relevant, that will define the future of Australian economy for 2020? Are there global issues or domestic that maybe will save us and actionable hit these forecasts? We'd love to know. Let us know in the comments below. Of course, if you haven't already, hit subscribe. We're going to bring more videos of HSC Economics review in the coming months. And we will see you next
time.
episode.